Ladies and gentlemen, welcome to Koehler Group's webinar series. The topic for this series is taking advantage of Hong Kong's business environment. We have reached part 5 of 5 webinar sessions that we have held this week. And today's topic is a guide to achieving profits tax exemption in Hong Kong. In Hong Kong, there are 3 types of taxes: profits tax, salaries tax, and property tax. Your Hong Kong company would only be affected by profits tax, assuming you do not buy property in Hong Kong. The current profits tax rate is 16.5%. But if your company has done offshore business, meaning outside of Hong Kong, one can apply for corporate tax exemption with the Inland Revenue Department. And if successful, it would mean a 0% tax rate would apply. A corporate tax exemption claim is not automatic. It needs to be applied for each year with supporting documentation. And there is no single determining factor for the Hong Kong company's success of a corporate tax exemption claim. In this webinar, Albert Hui, Senior Consultant at Koehler Group's Hong Kong office, will provide tips and recommendations on how to maintain all your corporate documents and accounting documents in order to achieve a greater success rate upon applying for the tax exemption rate. He will go through step-by-step procedures on how the application works and how the negotiations are dealt with the Inland Revenue Department. But before we begin today's presentation, I would just like to make sure everybody can hear me. If you would be so kind as clicking on the hand button of the control panel, that will allow me to know that the sound system is functioning. As is typical with a lot of webinars, there may be a little bit of internet stability. Please don't exit the webinar. We will try to fix it as soon as possible. If you are having difficulties in hearing the webinar, please note that you have 2 audio options available to you. One is through the microphone and speakers, and the second is through a landline. Just go to the audio section in your control panel and you can choose which option suits you best. Now, as is typical with our webinar series, we do enjoy conducting an interactive Q&A at the end of the presentation. Please don't be shy. Submit your questions and comments throughout the presentation today, and hopefully we'll have time to get them at the end of the presentation. If we don't, we will contact you directly, probably next week, as it is already Friday. Please note that we are recording today's session, and the PowerPoint presentation together with the recording will be distributed to all attendees later on today. If you are new to Koehler Group and Koehler Group's webinar series, allow me to introduce who we are. Koehler Group is a CSC company. We are based in the Asia-Pacific region, primarily in 3 jurisdictions: Hong Kong, Singapore, and China. The head office is in Hong Kong. We have a subsidiary in Singapore as well, with 8 offices located in China. We have just over 120 professionals that are located throughout the 10 offices. What we do is we help foreign investors not only with their market entry, but their expansion within the Asia-Pacific region, providing all types of corporate compliance, accounting, and tax services. One of our unique advantages is we speak over 10 languages internally and are able to communicate with our clients in their mother tongue. A little bit about myself. My name is Christina Koehler-Coluccia. I'm a director at Koehler Group, and I will be the moderator for today's session. I've been with the company since 2003 when I relocated to Shanghai to open our very first China office. Since then, my expertise has been solely within the Chinese market, but a little bit also in Hong Kong and Singapore. I've been helping clients with their market entry and their expansion within the Chinese territory, and as of late, their expansion within the Asia-Pacific region, primarily the ASEAN region. I'm co-author of our monthly magazine, which is ChinaInvest.biz. If you are interested in subscribing to our online resources, this can be easily done so on the homepage of our website by simply inserting your email address in the section entitled ChinaInvest.biz Information Series. Now, without further ado, I will allow Albert to introduce himself and begin today's presentation. Albert?
Yes, Christina. Thank you for the introduction. Thank you everyone who is attending this last webinar in this week webinar series. Let me introduce myself before the presentation. My name is Albert. I've been with the company since 2014. I've been helping clients to set up companies and giving advice on the tax planning, as well as supporting the management in preparing reports and making suggestions on investment of the company. Based on my background, most of my clients are located overseas as well as mainland China. Next slide, please. Today, we will go through 6 chapters in regarding the tax exemption claim, as well as have some recommendations and conclusions regarding today's topic. Next slide, please. Next slide, please. Thank you. Okay. The Hong Kong tax system is largely on a territorial basis. In general, only income arising in or derived from Hong Kong is chargeable to tax under the Inland Revenue Ordinance. Both company and individuals can be subject to the charge of profit tax. The general charging provision is under the Section 14 of the Inland Revenue Ordinance. There are 3 conditions under the Section 14 as listed below. The company has to carry on trade, profession, or business in Hong Kong. The trade, profession, or business drives profits, and the profits are derived from Hong Kong, which means that the profits are sourced in Hong Kong. If you have attended our previous webinar on Monday or Tuesday, we already slightly touched on this topic, so I'm not going to deep into this. But other than that, I give you some side information about the how to file the profit tax in Hong Kong. So the tax filing in Hong Kong, usually when you set up the new company, the first return, the Inland Revenue Department, which is the tax authority in Hong Kong, they will issue the first profit tax return around 18 months after the company incorporation date. But please advise that the 18 months is estimation time. So some company will receive earlier than that, or some company will receive later than 18 months. Usually the company has around 3 months to handle the filing. And in case you have appointed a tax representative, then it will have an automatic extension. In Hong Kong, there's 3 coding about the profit tax filing, and it is defined by your financial year end, which is M code, N code, and D code. I will just use December year end as because it is the most popular company use the financial year end. So usually, for example, if your company has a December year end and you appoint a tax representative on behalf of your company, which means your profit tax return will be filing each year, usually in the middle of August. And the profit tax return must filing together with a duty side audit account, as well as a profit tax computation with a schedule. Next slide, please. So the location where the company's activities take place is the key, whether the company's profits are taxable in Hong Kong. So vice versa, if the profits derived outside Hong Kong, which means that it is not taxable in Hong Kong. And the questions of location of profit, it could be difficult. Whether the profits are derived from Hong Kong, it depends on the nature of the profits and the nature of transactions. And it has been listed out the following. There's a few criteria that you can see whether the nature of the profits is driven in Hong Kong or not. I have a case that I remember when I handle my client. This client, he is obviously doing an offshore business in Hong Kong. I mean, all the profits and all the business negotiation and management decision is made outside Hong Kong. So when you're hearing that kind of information, and then you will easily judge that this is a successful tax exemption case. But when we look into the documentation that they provide to us, and then we notice that the company maintains an email server with a domain name, for example, which is www.abccompany.com.hk. Although they are not doing a real business in Hong Kong, but the wording behind the domain name HK, the IRD will deem the company is running a business in Hong Kong, and it will affect the corporate tax exemption. So this should be changed. And also we find that the invoices, under the signature, they have put address in Kowloon, Hong Kong. I don't know why they put that, but the IRD may challenge the authorized signatory. It's done in Hong Kong, and the business activities are done in Hong Kong. So what I'm trying to say is, although the whole business is not carrying in Hong Kong, but this kind of minor things, it could attract the tax assessors' attention to see or to believe that this company is doing business in Hong Kong. So please be aware of that. Next slide, please. The territorial concept has always been fundamental to the taxation of profit tax in Hong Kong. Only those profits rising in or are derived from Hong Kong are liable to profit tax in Hong Kong. Underneath is the most three common industry associated with the offshore income or non-taxable of a company. The first one is the trading profits. This is a very simple structure of the company, and it is just purchase and sales with a suppliers and customer. So if you think that your vendors and your customer is not located in Hong Kong, basically you can say that the business is doing outside Hong Kong, and the profits that you drive are not taxable in Hong Kong. Next slide, please. So the manufacturing profits. The Hong Kong manufacturing business enters into a contract processing or assembling arrangement with a mainland entity and to entity located elsewhere. The arrangement is similar to the one with the mainland entity. The Hong Kong manufacturing business will provide raw materials, technical know-how, management, training, etc. It may be possible to claim 50% of the manufacturing profits are not taxable in Hong Kong. So, which it means that, refer to my previous slide, the key where the company's activities take place and the nature of the profits and the nature of the transaction is very essential in this kind of industry. Okay, the next one is the service income. A Hong Kong company provides services partly in Hong Kong and partly outside Hong Kong. It may be possible to claim part of the service income rendered outside Hong Kong and therefore not taxable. Let me give you a case that I've been come across before. I remember one of my clients, they are doing corporate training, and this client engaged with their customer to provide corporate training all around Asia. And the client's office is located in China. And they signed the deal with their customer in China, all the negotiation, how to arrange the training, where the training will be performed, and also all the discussion is happened in China. And one of the locations they have to provide the corporate training is in Hong Kong because the customer has their own office in Hong Kong. So the client has to organize conference room in a hotel for their client for the workshop, 2 days workshop, as well as fly over a consultant to Hong Kong to perform the workshop. The whole workshop will take 2 days, and the service is performed purely in Hong Kong. So at the end of the day, the IRD challenged this client, saying that although your management decision or all the negotiation of the contract is outside Hong Kong, however, the services is performed inside Hong Kong, and the income and the client is receiving the service income from their client's Hong Kong office. So they have to pay that part of the income to the Hong Kong tax inland revenue department. Okay, next slide, please. So company could apply themselves or upon an agent or service provider to assist them on behalf to apply the tax exemption claim. So it may be possible to claim that the entire service income relating to the service rendered outside Hong Kong, which is not taxable. As mentioned, only the profit that are sourced in Hong Kong are taxable. So vice versa, if the profits are sourced outside Hong Kong, which is not taxable. The principle here is very clear and it's simple. I heard people say the Hong Kong tax system is very easy and very, it's no tricky. It's easy to apply the tax exemption as long as I don't have anything in Hong Kong. You could say that this is right, this is true, but due to the simpleness of the Hong Kong Inland Revenue Ordinance and the tax system is so simple, it also makes it there's so many gray area. The tax payer or the service provider, tax expert could argue that this client or this taxpayer is not eligible to pay the Hong Kong tax because their income is driven outside Hong Kong. So in the Inland Revenue Department, they have provided a simple guide on the territorial source principle of taxation. So I'm not going to go through this kind of information in my presentation today. You could find it in the official website in the tax authority. So it will simply list out the examples for illustrate the purpose of the tax applied to the different types of business which may fit into your company. Next slide, please. Okay, now we are going to talk about how does the tax exemption claim work. In general, the Inland Revenue Department, they are looking for a consistent tax filing basis. What does it mean is once you file your tax exemption claim application, you could not change each year. Also, it assumes that your company's operation has not been changed, so that the Inland Revenue Department can avoid the taxpayer take advantage by using this tax exemption claim. If the company decides to submit the claim at first place, they have to submit every year, even though there may be a loss generated. Let me elaborate more about this point. So although the company is submit the profit tax exemption in the first year, and then they could not change it because they're making a loss, so they claim the tax exemption. However, if on another year they're making a profit, then they make a tax exemption claim. So that means that it doesn't do anything bad to start as soon as you file the tax exemption claim as a new company. You just need to build up your case. Not only saying that, but in practice. I'm not too sure what happened if you find validating the offshore status by doing domestic business. The assumption is here you won't get any of those tax exemption, even you have 90% of the following correct procedures. So please, if you consider to apply the tax exemption, please make sure everything is clean and is in 100%. I've heard that many accountants in Hong Kong, they may tell you, wait to file the offshore tax return until the first year. Why they would say that, the logic I've been getting is that your tax liability, which is the profit tax, you have to pay the 16.5%, is less than the cost of filing the offshore tax option. But what they aren't taking into account is the cost to filing the offshore tax claim. Basically, it's just a one-time cost. So once you pay the fee, all years ongoing will be still remain of the offshore tax status, which is the 0%. So if you want to apply that, please add up to your expected saving of your Hong Kong company with this offshore status. Another fourth process for the accountants requesting the non-urgent in-filing is that your sales or your company won't be so high in particularly the first or second year after the company incorporate. You're just getting the business started and figured out. So you can wait to file the offshore once your revenue and profits are much higher. So yeah, I will leave it to you to decide when to do it. But I will advise my client, please do it as soon as possible. Better to set up and prepare from the beginning. So here's the interesting question. If the limited company decide to file the offshore claim on the second or third year, then what happens? Excuse me. Basically, this it is fine. It doesn't mean that you could not do these kind of things because as long as your business activities is not changed, then you can do it whenever you want. But then I will have a question come back from a director of the company. Then they will ask, can I claim back the refund of the prior tax years that I've been paying to the Inland Revenue Tax Department? The answer is no, because no, I don't think any government will give the tax refund for the previous filing years. Once you filed and fill out your profit tax return with your figures or numbers, then basically you are locked in. The only chance you can have a tax refund is your provisional tax that you paid is more than the actual tax payment you need to pay in the following years. But I'm not going to discuss this point in this presentation. But for that, please, yeah, you could do it anytime you want, as long as the business principal activities has not been changed. So next slide, please. Okay. Now I list out some documents required to collect to show how the business carried out, and I have been divided 3 categories, which are customer, supply, and trading. So when you are negotiating with a new customer from overseas, usually nowadays we use emails to communicate with each other. So please keep that correspondence. Also, the customer visit, if they come to your office to discuss the decision and the project, please make a record of that, because it will take into account later on if the tax authority asking for any evidence for support. And then the conclusion of the customer order, also the email correspondence, all the courier receipts and signed order from the customer, or the sales contract. I always address to the client, please keep all the sales contract or agreement at least in a scanned copy, because this kind of document is a must for the tax assessor to ask. This is the first question usually they will ask, all the sales contract agreement that you signed with the customer. Also, the receiving deposit from customer, please keep the email correspondence, all the bank advice, all the bank evidence that you received the deposit from your customer. Please keep it in a good standard. I suggest client usually please keep it in 2 ways. One is in a hard copy, use a box file to file it. And another way is keep one scanned copy in your computers or in a database, so that in case one of the file is lost, you still have another to back up. Next slide, please. Negotiation with supplier from overseas. Pretty much the same as the customer. All the email correspondence, you have to keep it, and the supplier factory visit record. This is the, again, this kind of evidence or support, based on my experience, the tax authority, they always ask. So this is, you cannot slip away or try to avoid to give this kind of document if the assessor is send you an inquiry letter. Conclusion of order to supply, email correspondence, order receipts, and order signed contract. Paying deposit to supplier. Again, all the email message, you send the money transfer, or the online banking instruction. Please ask your accountant or accounting department to keep all the records in a good standard, so that if something happens, you can easily get it from the from your server or from the folder wherever you filed. Next slide, please. This is for the trading, the quality checks of products. So usually if the people doing QC, they will send some of the experts to their factory to visit and do the checking. So please record their itineraries, travel itineraries. When is the day they perform the quality check, and also have all the paperwork to support. Concluding the shipping order, the email correspondence, again, the job order confirmation from the shipping company. Usually, if you engage with a service with a shipping company, you should get a consignment sheet or this kind of document. Please keep it in order. Sending packing list, pro forma invoice, etc., etc. Courier order. Also receiving the final payment. Or the bank statement, you could show it to the tax authority bank-wise, saying that this money is come from overseas rather in Hong Kong customer or supply. Then it will be great. Next slide, please. So this is the end of the how does the tax exemption claim works. If you decide to apply the tax exemption, you would then have to ask yourself a few questions. Here are they. Do it as soon as you open the company, or do it before you open the company, because the claim has to decline in the first profit tax return, as well as prepare the audit and also all the management account. I will talk about this in the next chapter. It can be do it in advanced tax ruling. And also, as I said, the tax exemption principle is very easy, but if you dig into the documents or you try to look at the business flow and activities, sometimes you may find it very complicated. So I advise you to seek for professional advisors and tax experts before you incorporate your company, or even though you already opened your company. Please ask their advice to review your current operation to ascertain the possibility of making an offshore claim, so that making sure there's no surprise later on. Or you can ask them to restructure your current operation to enhance the tax efficiency. Okay. The third point is tax effect of intercompany transactions. This could be touched on the topics of transfer pricing. In year 2015, that's imposing a significant further transfer pricing compliance obligation on companies doing business in China. So when you're doing business in China, you always, not only in China, but intercompany-wise, it may involve transfer pricing. It is a very complex topic, so please be aware of that. If you involve this kind of transaction, you should seek professional advice for that and learn more how to optimizing the tax outcome through the transfer pricing planning, and also as well as the tax exemption claim. So also one of the questions you have to ask, will you change the business activities in the near future? Because some of my clients, initially they engage with one business, but however, due to the global economy is declining, and they start to shift to another direction and try to do another kind of business. If this is the case, please let your tax experts know in advance, and also make them understand how the new business activities will be, so that they could have a well preparation of how to prepare the tax exemption and how to deal with and understand and making all the support documents, know how to deal with the tax authority. The last question is whether the cost effective to apply the tax exemption claim. These questions also it is very it's case by case because it really depends on how much turnover and how much revenue your companies generate. As I said, some company after they incorporate in the first or second year, they are not doing a very good business, and it may not be very cost effective if they apply the tax exemption because you have to pay the service fee to your professional advisors to do that. And so I will leave it to you to decide. Of course, if you have any question, if you encounter any problems regarding this, you can contact me later on so that we can discuss further about it. Next slide, please. Okay, now we are going to Chapter 4, the process to apply the tax exemption claim. So the corporate tax exemption is not automatically granted by the tax authority. Once the Inland Revenue Department receives your tax exemption claim, usually they will take some time to review the case, and then they will issue you an inquiry letter to try to ask and understand more about the business operation, before they finally agree the tax exemption claim. And the company has to submit everything the tax authority asked for, including invoices, correspondence like emails between the suppliers, customers for the negotiation, conclusion, and shipping documents, travel itineraries, as I said before, so that they could take a good look of it. There's an important notice. Please maintain the relevant documents, and your business is required to keep the business record for a period not less than 7 years. This is in accordance to the Inland Revenue Ordinance. Yes, I have a client. They want to apply the tax exemption claim, but at first place, I mean, their business is very clean and everything is doing outside Hong Kong. However, once the tax authority issued an inquiry letters to them, but the historical record is basically not keeping really clear. Some of the documents that the tax authority asked, they could not provide, and eventually it could lead to the company fail to apply the tax exemption. So this could be very serious. And how the record could be keeping is the record should be retained for a period of not less than 7 years. And also please be aware that failure to comply with the requirements without reasonable excuse may be liable to a maximum fine of 100,000 Hong Kong dollar. So please keep your books of accounts record, receipts, payments, income, expenditure, voucher, bank statement, invoices, etc. And also all the records of your assets, liabilities of the person in relation to the trade, profession, or business. This is a very essential document. Please ask your colleagues or ask someone else to keep it in a good order so that when the letters come, and then you can find it easily and reply to the Inland Revenue Department. Next slide, please. So there's two ways you could apply the tax exemption claim. One is advance tax ruling. Prior to you start the operation, you already can send a written notice to the tax authority to saying your intention. Of course, you have to explain very clearly of your business operation. And we will go through a case later on in Chapter 6. And also the other method is the normal tax filing. This is the majority, the client will do to apply the tax exemption. So they will wait until the first profit tax return has been issued after 18 months. Then they will submit it to the Inland Revenue Department together with all the financial statement and also the profit tax computation. In the meantime, please be aware of that. The company should prepare a set of management account which is for the internal use, but this has to be also provided to the tax authority if they ask. So please keep all the books and records yearly and try to avoid any backlog case. Next slide, please. So here are the 5 things you must submit to the tax authority if you want to apply the tax exemption. One is the audit financial statement. The management account has to be certified by the director or approved by the director. The profit tax return, if there's any, issued by the tax authority. Also a profit tax exemption, profit tax computation, together with the supporting schedule. The schedule is kind of like a document that is, they will indicate the breakdown of that particular account, showing to the tax authority how the figures and which kind of figures is taxable, which kind of figures are non-taxable. So yeah. And also the application of the tax exemption claim. Basically, just need to state that the company is applying for the tax exemption for this fiscal year. And then once the tax authority or tax assessor they receive it, and then they will put it in the case that this company is applying of the offshore status. So here's the interesting questions. How long does the process of the offshore status take? To be honest, there's no 100% strict answer for these questions. But to give you some ideas, it won't be sooner than 6 months. The reason behind is because, as I said, the ILD will send the company the inquiry letter. Then there will be some back and forth from the ILD if questions arise. So what if you file for the offshore status when you need to fill out your profit tax return in the meantime? Because you don't have the offshore status approved yet, so please be reminded that you still need to file a domestic company, which means you still have to pay 16.5% corporate tax rate. In Hong Kong, the Hong Kong government, they really doesn't want to promote this tax exemption claim. I have some clients, they come to me saying they try to Google or find online more information or even look into some books to understand more about this topic. But I don't think there's many information available outside because the Hong Kong Tax Authority will not want to promote these kind of things as they are losing out on that tax income. So the policy may change and time frame may change. It is a gray area from what a lot of my sources tell me. So again, please ask for help and think for professional advisors so that they can tell you the update tax information and what's going on in the Hong Kong tax regulations. And ILD, the Hong Kong Inland Revenue Department, will normally request the company to provide additional information, as I said, the document to support the claim. But they will not really how to say, deeply to look at your case. They will just randomly select the transaction. Usually, for example, if they see some transaction amount is huge, enormous, then they will look into it and they will definitely ask for it. So if you want to slip away about these kind of things, I really suggest you maybe the amount that you transfer or transact, you can split it into different rather than transfer in a large amount of money, particularly through the banking transaction. Next slide, please. Okay. It is therefore advisable to keep the complete transaction record to illustrate the fact all the activities are taking place outside Hong Kong, such as the following 5 points: the organization chart, email correspondence, agenda, the travel itineraries, and the purchase order. I'm not going through all the details about here, but I want to address one point. It's very important, is the transparency. So don't try to hide any information or not disclose any information to the Inland Revenue Department if they ask. Please give it all you have, and if they ask for, please send it to them at first place. Because from my experience, if you try to hide something and eventually they find out, it is a really bad impression for the tax authority. And usually this kind of case, it will not be granted for the tax exemption. So please bear in mind, transparency is very important to the tax authority, because when you're applying the tax exemption, which means that you're asking for 0% corporate tax rate, this is never ever be an easy things to do. So you have to be very honest and to be very transparency of what kind of evidence or documents you provide to the tax authority. Next slide, please. So after you submit the application, what kind of feedback you expect the Hong Kong Tax Department will provide? It will usually take around 6 months for the tax department to give you feedback. So in the meantime, the company still has to obtain, has not yet obtained the offshore status. So which means you still have to file an onshore company paying the 16.5% corporate tax rate. Even though you get the offshore tax claim, I have some question is, do the company still has to file the accounts or audit and the profit tax return? So please don't think that even though you get an offshore ticket, you can skip out of keeping your accounting books or audit yearly. This is not the case. The only difference is when you submit your books to the Hong Kong auditor, then they will take into account the offshore status, because they are the certified public accountant in Hong Kong, and they will ensure the companies are doing the books in a correct way. They are somewhat liable if they don't catch certain mistakes in the books. So please don't think that your company grant an offshore status, then you do not have to keep your books yearly. This is not correct. Once all the request information are reviewed by the Inland Revenue Department Commissioner, the confirmation will be issued. They will usually issue a letter named Form 1812. It is saying that the tax department will not issue the tax filing request every year. The Inland Revenue Department, they will never issue you a letter saying that this company do not have to pay tax. They will not saying that. They will just say they will not issue a tax filing request every year, or they will say no tax payable for this year, because the tax authority, they have the right to retrieve the company's record for a period of not less than 7 years, as I said before. So if they find anything, for instance, it's a fraud or anything dishonest, they could ask the company to provide all the documentations and supporting right back before 7 years. Next slide, please. The further inquiry from the tax department. So once they receive your application and they find that they need to ask you more questions, of course they will issue an inquiry letters and in associate with the business operation. The reply of the once you receive the letter, please reply within a month from the day of issued the letter. Or sometimes you can apply the extension. Usually they will. There's no regulation say how many extensions you could apply, but what I come across is usually you could apply 2 to 3 times, then they will stop give you extension anymore. So you can imagine the longest time you could answer the letters is within 3 months or 4 months. Then that's it. There will be no more extension could be granted. So there's another important reminder. The company must inform the tax department proactively if the principal activities have been changed, the business operation has been changed, as I said before, because this is the liability of the tax payer. The taxpayer has all the liability to inform the tax authority at first place. Please do not wait until they find out. If they find it out, and then the company will be in trouble. The tax authority will impose a penalty to the company, and the company will not be easy to grant a tax exemption because under these circumstances. Next slide, please. So now I have two case studies. This is a real story, real case study. In Hong Kong, it happens. They are both in the trading industry. I used it, and one is a successful case, and one is an unsuccessful case of the tax exemption claim. So let's go through case study one. Some of the background. The company is incorporated in Hong Kong in 2002. The business trading processed foods and food-related products outside Hong Kong. Purchase supplies in Asia, excluding Hong Kong, resell to Europe and other countries, excluding Hong Kong. So the company maintains the office both in Taiwan and Indonesia. Two directors managing the daily operations, one living in Indonesia, one living in Taiwan, respectively. There are two marketing procurement officers are presented locally in the Indonesian office. The company aimed to recruit additional marketing and procurement officers to be located in the to be set up Thailand office. Next slide, please. All the negotiation process and the purchase transaction is carried out in different countries, and central administrative function is required, and administrator and coordinator will be performed by the employees. And they are thinking Hong Kong has been selected as the centralized administrative office in order to contribute the smooth running of the administrative functions. Next slide, please. The company therefore planning to set up an office, the actual office, physical office in Hong Kong. There are some staff sitting in Hong Kong office providing following activities: issuing and accepting invoices from an ex-Hong Kong customer or supplier on the basis of the contract, sales, purchase already affected by the ex-Hong Kong associate. Arranging the LC, operating bank account, making payment, writing a check, and receiving payment, maintaining accounting record. Next slide, please. For the case one, here's the arrangement. The company is intended to enter a purchase contract with an Indonesian supplier and also the sales customers. The supplier was located by a Taiwanese director during the business trip to Indonesia, whereas the customer are located by the Indonesian director at a German food exhibition. All the communications and negotiation with both supplier and customer has been followed up by the email outside Hong Kong. Upon conclusion of both the purchase and sales agreement with the supplier and the customer, arrangement will be made outside Hong Kong, and the direct shipment is not passing through Hong Kong, and in Hong Kong there's no warehouse, no stock merchandise maintained in Hong Kong. The Hong Kong office is purely perform the functions of issuing or accepting invoice, writing check, operating the bank account. So the case about the tax authority's decision is the profits to be derived by the company with respect to the trading transactions with supplier and customer are not taxable under the Section 14 of the Inland Revenue Ordinance. So the only profits that they charge them is they will go through Hong Kong, but obviously this case, all the negotiation arrangement, and even though the goods are not passing through Hong Kong at all, although they have an office in Hong Kong, but this is not the management decision-making office. This is just purely administrative operation center. So this will not cost them to eligible to pay the Hong Kong tax. Okay, let's go to the second case. The background of the case 2 is the company was incorporated in Hong Kong in 1999, and it is the business of trading of accessories. It maintains a registered office in Hong Kong through a local accounting firm, and the beneficial owner of the company is named as Mr. A, who is the sales manager of the company B. The company is incorporated in Australia and is a major supplier of the company. Mr. A is responsible for negotiation and conclusion of the sales and purchase contracts for both Hong Kong and overseas sales. He lives in Australia and visiting Hong Kong at intervals of about 3 months. Next slide, please. The local accounting firm will perform all the documentations, the administrative work, and also issuing the purchase order, invoice, and operating bank account. And also the goods are mainly sourced from overseas suppliers. And the Hong Kong accounting firm, they are the purchase order accepting, they are placing the purchase order, also accepting the sales order. So this is already touching on the one of the principles that I've mentioned in my earlier slide. They are carrying on trade, profession, and business in Hong Kong. And as Mr. A's instruction, he is instructing the suppliers, sending invoice, packing list, and other documents to the Hong Kong companies, to the Hong Kong office. And also, they have a warehouse located in Hong Kong. This is one of the reason the company is not able to grant the tax exemption, because they have the physical inspection of goods carried out in Hong Kong. Next slide, please. So the case study 2 is very obviously this is not a successful case, because they have the Hong Kong local accounting firm organize all the sales and purchase order, and also placing all the payment, sending all the payment to their customer, so that the profits arising from the sales made to the customer are onshore profits subject to the Hong Kong profits tax, and all the profits they are arising is within Hong Kong. So this is unsuccessful cases according to the Inland Revenue Ordinance. So at last, here is some recommendation and conclusion. Hopefully, give you some ideas of how to apply the tax exemption, and hopefully you can take some of these points after this presentation. So the consider the following factors that will be valuable, which the company has no real office in Hong Kong and only using the registered office, has an overseas office in which the company's director and staff are working. There's no staff in Hong Kong, and they are rarely come to Hong Kong. All the negotiation, all the contracts are signed outside Hong Kong. There's no Hong Kong supplier and customers. Next slide, please. All the shipments are not going through to Hong Kong, as well as there's no warehouse in Hong Kong. The goods are not maintained in Hong Kong. Having a bank account in Hong Kong to receive money is not relevant in most of the cases, as the Hong Kong Tax Authority will select only randomly some transactions that are request all the documents related to this transaction to be submitted to ensure all the company's operations are carried out Hong Kong. Therefore, again, I recommend you to keep all your correspondence, all the emails, correspondence, contracts, signed contracts, everything, travel and itineraries. Please keep it in place in case the tax authority sends you the inquiry letter, so that you can reply to them. Transparency. Please don't hide anything, and keep everything in order. Then and work with your professional advisors. Then it should be fine, and then tax exemption it will not be very difficult. Next slide, please. Yep. That brings us to the end of my presentation, and thank you for your listening.
Albert, thanks a lot for your presentation. There have been a few questions that have come in, so why don't we just get started with them. The first one is, should an offshore company submit audited accounts with the profits tax return?
It is not required by law or regulation to submit that, but the ILD will accept the incorporated company to hand in the unaudited accounts as evidence together with the profit tax return. But if the company account is already audited, of course they are welcome the companies to hand in the audit accounts with the tax return. And if there's any branch of an offshore company in Hong Kong, while the head office is outside Hong Kong, in this kind of case, ILD will allow the unaudited branch accounts and do not require the audit from the headquarters outside Hong Kong. However, some cases, the assessor may ask for a copy of audit account from the headquarters as well. So this is really case by case.
And is it necessary for an offshore company to pay profits tax?
According to the Inland Revenue Ordinance, the offshore companies still need to pay the profit tax. But however, whether the profit tax will be charged, it really depends on the character and the degree of its activities in Hong Kong. So they will look into the principal activities of the company, whether it touch on the carry out trade or business in Hong Kong, those three major conditions, whether the profits are derived from Hong Kong. Yeah, basically it is the answer. Yeah.
And how much does it cost to apply for an offshore exemption?
To apply the offshore exemption, it could be in many different ranges. So usually we will ask the client to provide some information to us. For instance, the current business setup, who are the directors, how many are they, and what are the nationalities, and some basic information in regard to the company structure. To ensure, of course, the difference here is that when you submit your books to the Hong Kong auditor, they will take into account the offshore status. But it really depends on how complicated your case is. There's a lot of revenue. There's a lot of directors. Sometimes the case could be very complex. Is there shareholders who are the corporate owners? I could say if the company have more layers of corporations, the most documentations and more questions that will come up. So the price or the cost to apply for the tax exemption will go up. Yeah.
All right, and how is the IRD determining the place where that company is running? I mean, during the application process.
Like an offshore company, they are facing the same requirement as a Hong Kong normal company. They will come to report to the tax authority. They also have to register a business registration certificate in the IRD and also hand in the profit tax return if issued. If you need to hand in the tax in that particular year of assessment, but not yet receive any tax return, you still need to report to the IRD within 4 months, please. It is very important because if you report after 4 months and then IRD may send you a penalty notice. So please be aware of that. And enough records should be kept either both in Chinese or English for minimum period 7 years, as I said, to ensure the accessible profits can be treated.
Thanks, Albert. And then we have one final question that we have time for today. There are still other questions that have been asked, but Albert will get to you later on. This is a personal story. A royalty payment is paid by our company in the UK to a designated offshore company which does not have business in Hong Kong. Does that company in Hong Kong need to pay profit tax?
In some situations, the royalty payment received will be charged, even though the offshore company does not run any business in Hong Kong. Let me give you some example. Like, for instance, if the payment obtained from the exhibition or the use of a Hong Kong television frame used in Hong Kong of any patents, design, trademark, copyright, etc. These kind of things that related to use in or outside Hong Kong, it could be taxable inside Hong Kong. Although some of them, they may be able to deduct in the accessible profits under profit tax. But it really has to look in the case whether these kind of royalties are used inside Hong Kong or outside Hong Kong. But I can give you a few points that to guide. For instance, whether the trademarks, where is the trademarks registered is an essential point that the IRD always looking forward to. Look forward to, and also the negotiation and the agreements, where is it made, and also the effective decision, where is that management decision, is it making inside Hong Kong or outside Hong Kong, is very essential to determine whether this income could be granted as offshore or onshore.
Great, Albert. Thanks a lot for the Q&A. Again, apologies to those who did submit questions, but we've actually run out of time. As mentioned before, the recording and the presentation will be distributed to everybody, and you will have Albert's contact details within the presentation as well. Last but not least, if you are interested in subscribing to our complimentary online resources, please do go to our website, and on our homepage, just insert your email into the section called ChinaInvest.biz Information Series. We are also on various social media channels, so do follow us on YouTube and on LinkedIn. I'd like to thank everybody for joining this great webinar series on taking advantage of Hong Kong's business environment. I hope you enjoyed the topics, and I hope that Koehler Group was able to provide you with an overview of what the current status is in Hong Kong. I look forward to seeing you all again very soon. Thank you and goodbye.